GameStop, Bed Bath & Beyond, and AMC are responsible for the biggest shift in market dynamics since the introduction of the internet to the world. These type of stocks are called meme stocks by many people, and some of them became a nightmare for hedge funds and managers around the world. Before getting to it, if you would like to help the channel, please consider leaving a like, it really helps. Meme stocks are pieces of companies that are usually very close to bankruptcy and experience a sudden surge of their prices for a very short period of time because of social media and retail investors dumping money into it. The word meme comes from the Greek word mimema, that means imitation. So we can call a meme stock a shared investing idea imitated by a lot of retail investors. Some examples of meme stocks are the infamous GameStop, AMC, Bed Bath & Beyond, Virgin Galactic, Palantir, or BlackBerry. Some of these stocks, if you would have invested at the right moment, you could have made millions of dollars with a very small initial capital amount. But it comes with a lot of volatility and risk. Some people made a lot of money while others lost all of their savings. Like any asset, you could be a winner or a loser depending on the time frame of your investment. We have seen massive stimulus checks and a lot of free time during the pandemic that resulted in individuals investing huge amounts of money like never before. We can be sure now that during periods of economic growth and excessive liquidity, individuals, aka retail investors, are more willing to invest their money in the stock market and other alternative assets. Even though the majority of capital and power still remains in Wall Street and its parallels around the world, the power of the retail investor cannot be underestimated anymore. We have seen the dawn of the retail investor. We experienced the power of the retail investors in the drama between Wall Street bets from Reddit and institutional investors in 2021. This group of retail investors, paired with other investing Discord groups, initiated a movement against the way financial markets function traditionally. They had their small capital amounts that pulled up together could in some way or another rival big investment funds and players from Wall Street. One of the amazing achievements of these retail investors was the short squeeze movement in favor of GameStop. They managed to make funds crumble to pieces over a short period of time due to the sudden surge of GME stock price thanks to their investments. A short strategy is simply investors borrowing stocks in order to sell them at market price in the hopes that the price will fall and they will buy them back cheaper in the future and return them back to their rightful owner. This strategy will make you money from the difference between the money you got from the sale of the stock price at the beginning and the money you paid for the stock at the end of it. This strategy was used by many funds to make a profit on a failing business like GameStop. Institutional investors usually are guided by fundamentals and research in order to buy or sell a stock. But in 2021, retail investors, guided by a sentiment group of contempt against Wall Street, started squeezing the short strategy of these hedge funds. The funds were kind of certain that the GME stock price would decrease or strictly go out of business, and therefore they could make a huge profit from it. The problem starts when the stock price starts increasing and their strategy no longer works with a higher price because they have to return the stock, and buying high, selling low is not a smart idea. They panicked because the stock grew and grew. Their accounts were being demolished and they had to buy back the stocks to return them even if they were at a loss. This buying back event made prices increase even more, and it's a vicious cycle that will ruin the last one standing. This example made everyone know the relative importance that retail investors have, and now investment funds will think twice before doing a short strategy. Of course, the stimulus checks and the free time were an incentive to act like this, but we have to assume that this type of behavior will not go anywhere. Especially with cryptocurrencies, the democratization of trading with apps like Robinhood, and higher financial literacy. We know that during financial struggles, it is very unlikely to see this type of behavior and the major shifts in the price due to lack of liquidity. And the institutional investors that usually have a better risk management and more capital will return to the traditional operations. Investing with a community or herd investing might be a solution for some, but it is still quite risky to invest in something without doing proper research, understanding the fundamentals, and applying risk management with the asset you are considering. You could become a millionaire or lose everything. Like any risky investment, at the end of the day, you choose if you want to invest with a community, invest by yourself with your own research, or not invest at all. The important thing is to appreciate the shift that meme stocks and retail investors have brought upon the financial markets in order for us to understand it better and have a more democratized financial sector. Many institutional and retail investors are highly attracted to innovative companies that are using new ways of doing business in order to disrupt their industries. If you would like to discover the 3 business models that change everything and are now being used by companies that attract billions of dollars from investors, click here to watch my latest video on business models. Thank you for watching. See you on the next one. Ciao, ciao.